Good morning, this is Ron Brown. It's the 2nd of April 2016. I'm going to show you something that I recently put into HGSI Investor, and this is in the volume price analysis module. This is the latest version of these views, filters, and combos and charts that I have put up for HGSI users. And these views in particular, I'm going to talk about primarily number one. This is based upon a book called The Perfect Speculator. It came out in 2005. I read the book several years ago, and I noticed on one of the boards that I'm on that there's a lot of discussion about the Perfect Speculator and that type of trading, buying stocks that are essentially breaking out to all-time highs. And it's just like anything else. Sometimes it works, sometimes it doesn't. But I thought I would put together a screen for those of you who use HGSI or those who are potentially thinking about using it. Now, the way this is constructed, for those of you who don't know anything about HGSI, we have what are called warehouse views. This is a warehouse view, and all of these are fields of information that you can put in any warehouse view that you construct. And when I bring up this part of it, you can see that there is a filter attached and also something we called a combo ranking. And the filter is very basic. Generally, I am very I guess frugal is a good word with my filters, because I don't want to eliminate a lot of stocks. I'd rather eliminate them other ways. So this is a basic filter, $5 stocks, trading for $5 and above, trading 250,000 shares per day. Now this is really the key to the filter, and days closes high is greater than or equal to 798. That's about 3.2 years of data. That's the extent that HGSI looks back. What I do is I look at the charts to see if these are all-time highs or not. That's a very simple matter, which I'll show you. And then I'm looking for common stocks only. Another field that you could put in here is group greater than zero. I did not do that because I wanted to try this with ETFs also, so I just left it as it is. Okay, that's part of it. Now the other part is what we call a combo ranking, where we can put any field in to this combo that's available in HGSI. And I put some terms that are probably not familiar to most of you. Bongo Weekly is an internal relative strength indicator. I weighted that heavily. The Force Index, which is a price and volume indicator, I weighted that heavily. The percent close to the 52-week high, the percent above the 200-day moving average, white body for bullishness, industries moving up, and then there are some other fields in here which are, many of them are fundamentally related. So with that in mind, I am sorting on what I call the raw combo. And you can see that it brings up Broadcom, AVGO, which is the stock which best fits that combo ranking at the moment. And if you look over here, you can see it's a semiconductor device. If you look down the list, you will see that there are several semiconductor devices, and if I sort on industry, it shows me that there are 5 or 6 here which are meeting the criteria. As I go back up to the top, you can see that this day's closes high is 798 on all of these. So these are all reaching at least a 3.2 year high. Let's just take a look at a couple of these. Now I'm going to isolate by going down to the industry group. I'm just going to isolate on the semiconductor devices. It only lets the semiconductor devices pass through the filter, in this group pass through the filter that meet these requirements. So let's take a look at, we'll just use Nvidia to begin with. Now this is a chart It's called a VPA VFB chart, which means that I have the VPA signals, or the volume price analysis signals, on here, and I also use VFB charts, or visual filter backtest. So when a stock, or when the dark reddish brown areas appear, that means that the requirements of the filter are being met. So we know that Nvidia is out at least to a 3.2 year high. Now if I hit my alternate key and hit the weekly key, or the W key, I can see that it's out to an all-time high. And let me just do an alternate. 5, no, I thought it was an all-time high, but it's not. So this is why I look at the charts too. But if I put my crosshair up here, you can see that it is approaching this all-time high. But that goes clear back to 07, before the crash. Does all this really matter? Do you have to wait for that all-time high to be established? I say no. I think you're wasting, you're putting yourself in a precarious situation if you do that, because there is a lot of money to be made in these stocks long before they hit their all-time high. You're going to find the exceptions, like Taser, which the book is essentially based upon. No, that was his other book. That was called The Perfect Stock. But anyway, it was about Taser, but the same type of stock. You get these runaway stocks where if you buy the all-time highs and you keep pyramiding, you can make a small fortune. I don't know a lot of traders that have the nerve to do that, but the ones that do can make an awful lot of money. But my point is, this is a perfectly valid way to find stocks that are breaking out to multi-year highs and potentially all-time highs. Does that mean these trades are without risk? Absolutely not. This is a weekly chart right here. I'm going to zoom in a little bit, take it to this level, and you can see when this stock is breaking out to a new multi-year high, where is the risk? Well, the risk is often when it's breaking out. Now I'm going to go to a different stock that is breaking out to an all-time high, and I think Broadcom is that stock. We'll take a look at it. But every time it gets up into this breakout area, you're going to see some profit taking. Well, I shouldn't say every time, but most times. And it's frustrating, obviously. So every time there is a red bar, or brownish red bar, it puts you at risk of buying the high. Now in this instance, it moved up from about the 23 area up to this point right here, which is about the 34 area, and then it corrected again. And now here we are in a similar situation. This time this high was surpassed, and it's moving up, and the volume is heavy based upon multiple pocket pivots, and also the force 2-day and 13-day periods are positive. I use these indicators all the time because they're based upon price and volume. The only thing that really matters, in my opinion. And also, if you do not pay attention to groups, you are going to get killed. Look at this, how this tracks here. Now here it was holding up, or it wasn't doing anything while the group was moving up. The group fell off sharply, but it held its ground. Here, look how this stock is tracking with the group. When the group rolls over, the group is the dotted line. It goes right down with it. Forms a W bottom here, the group does, and as the group takes off, the stock takes off. Now looking up here at these numbers, look at this quarter, down 2.8% compared to the same quarter 1 year ago, yet it's breaking out to an all-time new high. Do you think it's breaking out because of the fundamental numbers, the earnings and revenue numbers? No, it's breaking out to an all-time high because of the group. I misspoke. I said an all-time high, a multi-year high. I'm going to go back to a daily chart, and here's what it looks like on the daily chart. Notice how it's moving up with the group, a little pullback here on the group. These are called volume points of control. This is something new to HGSI, but what these are horizontal lines which represent points of control where support and resistance are defined because of both price and volume. Now the blue line, this is something I just came up with a few weeks ago, is the 10-day volume point of control, and it does a very good job of keeping a trader on the right side of the market. Now, as it got in this area right here, you can see that it stalled, but look at the wicks down below. That tells me that buyers are buying here and not letting this stock go below this 30 period of VPOC, or volume point of control. Then it breaks above the 90 period, the red line, and it's well above the 10 period. Now, the way this works is if you scroll back here, you see that the 10 period line is always corresponding with the 10 period horizontal line on that day. Okay, let's take a look at Broadcom. I'm going to keep this video pretty short, but I just want to take a look at Broadcom. I'll go to a quarterly chart, alternate Q on my keyboard. You can see that Broadcom is breaking out to an all-time new high, and it's gone from $8 up to 160, and this goes back to 2010. It looks like 2009, something like that. Let's just look at the here's a weekly chart of it. Let's go to a monthly chart somewhere in between, and you can see where it broke out back here at the $40 price range. Now, if you look at this longer term perspective, look at the 10 period volume point of control. It was great up here, and then we run into a lot of chop as the market corrects from the mid 2015 until recently, and it finally broke out again to its all-time high. And let's take a look at the weekly chart. You can see all of these reddish lines indicating the breakout. Now this was a much cleaner stock. It shows you that this theory does and can work. But which stocks are going to do this? Obviously we don't know. That's why you have to take risk into account and determine where you get out before you put a trade on. This 10 period volume point of control, either on a daily or weekly chart, looks like it could be used for that purpose. Rather than taking an arbitrary number like 7 or 10%, why not let you get out where the volume price are telling you to do so? Once again, and I cannot overemphasize this, look how this stock pretty much tracks the group. The group is extremely important. Now the earnings and revenue up here, they're more consistent. You can tell by this line. The red is the revenue line, the blue is the earnings line. Looks like it's got a little dip coming up in the future with that dotted line. It's going to be positive, but it's going to be off compared to the same quarter 1 year ago. Once again, what's driving this stock? It's good growth, good earnings and revenue growth, but it's also the group. Now in the book, and let me just change this to a daily chart. Here you go. Here's the breakouts here to the all-time highs. The risk is a lot greater up here than it is down here when it's breaking up through those volume points of control, or through that volume point of control line. Now let's take a look here. This is something that's in the book. He is looking for a 20-point move, or I'm sorry, 20% move over a 4-week period and hitting a new all-time high. And only one stock in this group, INPHI or IPHI, is meeting that criteria. And as we look at that stock, you can see that once again the 10-period volume point of control is pretty good. It dipped down here, it held above it. This day it was an inside day, but you can see there were buyers here. It got back above it and moved. You may have gotten stopped out here, but there are ample opportunities to get back in. Look at all these pocket pivots, all the blue lines showing how well this one's doing. Now let's do a quarterly on this. You can see it's out to an all-time high. Here's the weekly. Here's a monthly. And here's the daily. So this stock would meet all the criteria right now of breaking out to an all-time high. They're not even looking at earnings in that book. You know, forget the earnings. These are momentum plays. I would say momentum based upon both the stock and the group. Now another thing that I put in here, and I totally agree with their assessment of trends, how they're developed and how they're measured. I'm agreeing with what's in the book, but it's not always quite so simple to see higher highs and higher lows. What I did on these two charts here, here's a daily, here's a weekly version, but I used black for the price, and the blue line remains the 10-period volume point of control. Down here I've got a window showing the volume. You can see that this stock is breaking out on heavier than normal volume pocket pivots, but here's a percentage to the 20, the 50, and the 90 day. Here it is out to the all-time high, and it reached that all-time high at this point, this point, this point, but it also reached them back here, and then we had the correction. But the black lines make it much easier to read higher highs and higher lows and the chop. Now, coming down here to the bottom, you can see that here is the low, moves up here, forms a higher low, moves up, forms a higher low, breaks past resistance here, higher low, goes all the way up here, pulls back. It doesn't break any of the lows here, even on that slight pullback. Okay, the higher high would be up at this point right here, going across. But here's a higher low coming off this low, here's a higher low, and then it breaks through here about the 28 mark, and then there's really no other challenge on this. So this chart, or these charts, will give you a much easier way to read the higher lows and higher highs, or lower lows, lower highs and lower lows. That's it. I don't want to make this video any longer. I just wanted to show you that this is available in HGSI now using the VPN. I'm sure I'll be talking about this a lot more going forward. Thank you for